This is the seasonal stock and ETF report for today, November 3, 2022. Today I'm going to show the development environment. So I'm going to show a feature that's not available on our production yet, but it's too cool to not show it yet. Let me go to indices common. Select S&P 500. Here's an opportunity in the last 10 years. It shows that between today and June 7th, the markets, the S&P 500 has gone up 9.82%, 9 out of last 10 years in average. It failed last year in 2021. The feature is that we can also filter this by odd years, even years, presidential election plus 1 years, midterm and midterm elections plus 1 also. So let's just quickly take a look at odd years. Odd years are the years that there's no election. This opportunity has been profitable 68% of the years in the last 94 years. On even years, which are the election years, it's been profitable 74% of the years. How about midterm election years? On midterm election years, this opportunity has been profitable 87% of the years. The last time during a midterm election that S&P 500 actually went down between November 3rd and June 6th was 1946. Since 1950, during the midterm election years, S&P 500 has gone up an average of 14.29% between November 3rd and June 7th of the following year. That is just an amazing statistics. So seasonally, both because of the time of the year and because of presidential midterm election years, this statistic holds. So chances are high that this year is also going to be profitable, unless some kind of a fundamental change occurs and we repeat 1946. How about midterm election plus 1 for the following year? It's been also profitable 83% of the years, but it failed in 2007, 1983, 1939, and 1931. So those are some of the ways that we can now filter our data to actually see how stocks or different financial instruments perform during United States presidential election years, and cycle it by plus 1, 2, 3, and so on. So let's go to Dow 30. I know the market's been dropping sharply yesterday when the Fed announced a rise in interest rates. It's also slightly down today, but seasonality shows that we are on the verge of going up. So we'll see if it's true or not. Meanwhile, Visa is on the top of the list. Last 10 years, it's made 15% from today until June 5th. United Healthcare failed in 2018. It's been up all other years. A short-term Nike failed last year in 2021, but it's been making money 4% in 1 month period. McDonald's also bullish except for 2013. It has made money other years. Here's a short-term one. Travelers. Failed in 2017. This is only a 3-week period. 2017, otherwise it's been profitable. Top of the NASDAQ. T-Mobile is still on the top. We have 14 years of T-Mobile. So take a look. If we actually go and look at even years of T-Mobile, it's been profitable every even year. The 2 failing years were the odd years. Fiserv, ADP, Monster, Keurig, all great opportunities. Top of the S&P 500 is Moody's. High Sharp ratio. It's gone up last 10 years, 3.62% in 26 days. 218-day opportunity for Northrop. We had it on last year also. It's made money every year. Chances are good that it's going to do it again this year, especially because of all the geopolitical things that are going on around the world. Defense stocks are hot. Church and Dwight, I am not familiar with this one. But it's made 13.77%, except for 2020. Anything new on Russell? Nope. It's Moody's. Wilshire, also Moody's, and Northrop on the top of the list. Let's take a look at ETFs. Consumer staples on the top. So we have 23 years of data. We can look at odd and even years. On the odd years, it has lost in 1999, but we are in an even year. So in even years, it lost in 2008, 2000, and 2002. Junior gold miners. I'm going to change the start date to see how has it started performing if we would have shorted this 2 weeks ago. This would be this year. So if 2 weeks ago you shorted this, you would have made almost 5% on this ETFs. XHB, S&P Home Builders. It's bullish, but because of interest rates, things might be negative here. There it is. So if starting in mid-October, it's gone down 0.6% against the seasonality. But there's still time. But I am not, I can't see how home builders are going to be bullish at this time with interest rates rising. Okay, that's it for today.